Hello guys, glad to have you on board again. Today we'll do as usual, we're gonna skip right away all the cryptocurrencies. They just do nothing. They are still remain right into the expected price area, and not to say right in between. So pretty far from resistances, pretty far from support as well. So really nothing you should care about. Volume is dropping again to a very low level, probably one of the lowest level we've ever seen. So still suggesting we have the transfer of ownership of that valuation out of speculators going into long-term potentially buy and holders. It's just hard to figure out what is the profile of those buy and holders. Are they retail traders who are buying but will be ready to switch, because the difference between an institutional trader and a retail trader is just the experience they have, because the retail trader is going to be far less experienced than the professional trader will be, meaning that the risk management, the psychological effect, negative effect will be dampened when it goes to the professional. I mean, the professional is not going to make a switcher kind of trade. It's not going to be, okay, I was looking for buying, and then I was in a buy and hold scenario, but maybe I should sell a little bit to buy again later. This is obviously what a retail trader is about to do, but not a professional. So if we have more professionals than we do have retails, then I think the buy and hold will just be what it is, which means we're going to have both bullish and bearish volatility, but we'll have way more bullish volatility than the bearish ones we could have. If we do have more retail traders than institutional traders making the buy and hold in here, the problem is that the retail traders will be more likely to switch, which means we could have both strong bearish volatility and strong bullish, which means we could still very well have the brutal dumping shit leading us to 4K, 3K, I don't know, only imagination will be the limit. So obviously in here we're switching hands from short-term traders to long-term traders, which means we'll have volatility because those who are holding the value in here will have long-term views, so long-term perspectives in terms of prices as well. They'll not release their calls until we get to the 10K, and as well they'll not release until we go below 5K, which is, if we have to move to make the retail traders switch, then we have to go far lower than what we currently do. So considering that the 4Ks are already done and we're not going to go there, is a question that you should never ask yourself. If we do this, you're not switching anything. That's the only thing that's going to make a difference between a good trader and a bad trader in here. Retail traders are going to switch, probably are going to lose the money in here because they're going to sell at lowest prices ever. So you don't sell. It really is, and we've been clear on that since the first day. If you made the buy and hold, do it like a professional will do. It means you're ready to lose it all. It's nothing you care if the prices go to 3K, you're not going to buy again. And moreover, second mistake that the retail traders might be able to do, and not a professional, is rising interest in the market, rising exposition. So other kind of regular switching thing that we can see on the retail traders, and a mistake that you absolutely don't want to make here, is adding to the position sizing, meaning that you plan to put 3 or 4K or whatever, how many you decided to put out there, and still I stand on this, has to be a tiny amount of your entire asset, or entire available asset. You shouldn't be putting it all into cryptocurrencies. It would be the worst case scenario. So that set aside, if you decided you would put 5K in that market, if you put them in already, then there is no more than you could do. You're not going to add money to that package. You're just going to wait. And if prices goes to 3K, then that's a shame. Yes, you could have bought twice your amount of Bitcoins with a much better price. Yes, but who gives a shit? What we care is not how much you could have gained making a better trade. It's just how much you're going to gain if this works. This is the only question you need to ask yourselves. Yes, you might have made twice the benefits if you bought at lower prices, but what if we never go there? I mean, you can do as I do, and I stand on this, making half the decision. If you think if you still think the probabilities to go down there are pretty significant, then what you do is that you put half the money you want to spend in Bitcoins in here, and you spare half that money to go eventually buying lower at 3 or 4K. But if you already put it all in, then there's nothing more you're going to do. If prices go low, you just don't switch, you just do nothing, and the first thing that's going to come to your mind is, maybe I should get some more money in that market because prices are now very much more affordable than they were before. So if you do think it that way, and you will probably, just remind what I say right now. Don't put a single fucking dollar or euro added to that market. You plan to put the amount of money you already put it in, you just fucking wait. Anything you change to the plan just make you a switcher. And switchers are the worst ever traders. You just want to stick to the plan as long as the plan is going according to what you were expecting. We are expecting the possibility for the price to go there, but we are trading accordingly for the price to go there. And it really is going to be a binary choice, but what we do in here is that we accept both. We want the price to go there, but we accept the price to go there in between. So all we care about is actually the price to go there. Going in there is nothing you care about, unless you've done it the way I did, meaning I spared 50% of the amount I want to put there for the eventuality of the price to go there. And in that case, and in that case only, I'll be adding 50%, the remaining 50% of the assets I have allocated for cryptocurrencies. Okay? So that being said, anything aside from this is nothing like trading. It is gambling. You do however you want, but if you do mistakes, you're going to be among those who generally come to markets to lose their money. Professionals tend to take that money because they make more rational decision. The only rational decision in here, and the one you absolutely want to stand for, is not being a fucking switcher. Okay? That's all it is. Those who were crying for buy and holds back then, or yelling, you should fucking buy and hold and not be scared. This wasn't close to a timing to make a buy and hold. Now we're doing it. This is what we were looking for in order to make the buy and hold. I've been clear about that. Since February, that was the plan. So now that we're at the activation of that plan, obviously we need to activate that plan, but there is still risk management, and this is what I'm trying to teach you guys out there. So learn how to manage the risk and manage your psychology. Don't make the stupid mistakes. If you got into buy and hold, you have to go straight forward as a buy and hold requires it to be. So that aside, we switch to the regular markets, and that's quite a pleasure to see this today. So German indexes have been breaking supports. It's basically breaking supports all across on the euro area. We're not breaking support in the Chinese indices, but we do have breaking some major supports in the Japanese indexes. We're basically freaking falling apart. So great scenario in here. Really a great job. This one is showing some huge gains, and I'll still let those in the market. I still expect the market to go target number 1 in the next following days and weeks. So I expect that we're going to rise interest in bearish markets right now instead of just focusing for forever gains like the market was planning. So first of all, I target those levels. So this is not going to be that way. I think target number 1 is going to be dear to me. And this is where I get target number 2. Okay, so this is how we're going to trade this. I don't think we're going to do this. As we have a double top structure, what we can expect is basically the price to reach out for the long-term support, which is in here. And I think in here we're going to maybe slip a little bit through those levels. So target number 1 to reduce the leverage, target number 2 to obviously take the gains out of this market and wait for a retracement to go back in. But what we want to do here is simply make a lower low. And when we make a lower low, we'll just wait for the market to search for a higher low, for a lower high, sorry. And whenever we'll have this one, is this one when we'll get to trend trading. So basically, we're waiting for building a lower dip in here, retracing, being the big short in here, and then we're going to go for more bearishness in the long run with the trend traders joining us in here. So this is speculators wave. As always, only the speculators will have see this coming, only the speculators will have take that money, and trend traders will join us in the next run, and they're basically going to be taking some stop losses in here, as we speculators will take gains. But that's how it goes. I mean, when it is trend trade, and when speculators anticipate the reversal too early, they generally have to surrender a few stop losses to the trend traders. So that's kind of a give and take game. Okay, for some time I will take their money, I'll take the trend traders' money, and they will also take monies out of me from time to time. Okay, it's how it goes. So it's a give and take. It's no who's better, who's got the bigger dick. It's really nothing we care about in here. It's just we're all here to take some money off the market, and no more than that. So we've got the US oil pouring as well, breaking through supports. So it really reminded me of the fucking gold back then. It means like the Wall Street is doing everything they can to create some growth and entertain people. It means that back then we had to put pressure on the gold, and right now we put pressure on the US oil to remain cheap oil available for growth. So it is like we just don't want to end it no matter what it is. We're ready to do anything we can, even if that means bringing it back to $55. If it has to go there, we'll go there. So it really sounds like a stupid trend to me. It's like something that never ever ends, like back then the gold was doing. I mean, remember this. I've never seen anything like that in commodity trading. So US oil doing the exact same stupid kind of trend is really worrying me once again about another potential manipulation of the market. Or call it distortion. I need to make sure not using manipulation, because people can misunderstand that. Really call that distortions. It shouldn't happen that way. It's happened anyway. It happens anyway, which means there is it creates distortions. And whenever you have distorted market, what you want to trade is when the market goes back to normal, and not trading distortions, because distortions comes with instability, and the problem is those instabilities can just stop from a day-to-day basis for unexpected reasons. So you don't want to trade those trends, because they're really way too dangerous. They look easy when you see them on the charts, but back then, remaining a seller of the gold on all those big levels was really, really dangerous. And those who played that game, yes, they made gains, but with an extreme amount of risk taking. So this is what I teach you guys not to do. And those kind of trends, they look beautiful, they look easy to trade. You say, okay, it was a channel, and basically you just had to sell the channel. Yes, but this is a rare, very rare case of scenario. You rarely see those trends. And if you do try to apply that strategy into other markets, generally you're just going to end up bad wounds. So no, you don't want to be playing that game. So set aside, gold's breaking resistance as well. So yesterday I've been putting the money in the market. Obviously today it's paying off. All the reinforcements have been put in there. So I'm rising my interest on that market slowly but steady. We're reaching 38.2% retracement. I expect the market to keep on going forward. We have the breakout patterns. We've got everything we need to go higher. We've been consolidating for a little while, so I expect for here we might be ranging a bit, because we're both trading the upper boundaries of that trend channel and the 38% Fibonacci. But I strongly expect that after a short-term consolidation, we might have another breakout, leading us to 50%. So I remain bullish, and I don't do any profit taking until we get ourselves to 50% retracement, because I think we're going to keep on doing the bearish movement we have today on the Nasdaq and all global indices. Okay, so we're breaking supports, gold is breaking resistances, everything suggests this is a movement that is keep on going. So why would you stop doing it? It is part of the plan. So as it goes part of the plan, you don't want to be a fucking switcher. You just let it go. It was part of it. We're rising interest, so we're rising exposition. So I've been putting some money back into the Nasdaq, back into the gold, back in silver. I'm still out of US oil because I think it is hard to remain bearish in there. But I'm adding money into GBP/USD, adding money to Euro/Dollar, adding money to USD/JPY. So yes, it goes according to the plan, so I'm adding money in the market. I'm not doubling the position sizing, but I basically added 25 to 50% added interest into those markets. So I'm rising interest as the trends are moving forward. You should do as well. Okay, this is how you do speculate. First, you take risks, and now that we're going out of the entry prices, which means gold this is where the speculative area was. And obviously, now that we're going away from this, you need to rise interest in the market, meaning you need to add money to those position sizing to double and triple the gains. You don't speculate just to look smarter than others. You just do speculate to have far away stop losses, and you're going to reinvest those gains as the price moves according to your plans. So obviously, in here is not the moment you should rise interest into gold. Where you wanted to do it is in here, when you got the bullish breakup, is where you put the money in the market. In here, you just wait for the price to keep on going. You're not buying a resistance. We're 38.2% Fibonacci retracement. So you wait for either the price to work that area and break it up to get in, but you don't trade when you're trading a resistance. There might be a breakup in here. You just want to make sure it happens. And for now, you're not buying a resistance. If you forgot to buy gold, it's too late. I'm sorry about that. So wait for the next breakup to occur. Set aside, Apple is something we need to talk about. We're going to gap down today on Apple, and it is something I like to see. So half an hour from now, we're going to be opening Wall Street. It's going to be pretty interesting as Apple is going to gap down for a second time. We're gapping down $215, which means we're gapping down 2.5%. We're gapping below support areas, and I expect Apple to just fall fucking apart. And I would like to see this. That was part of the plan, to fucking range for a few days, failing to break up that resistance. So it's a check and check. Next step was to gap down and make a breakout gap. So make a gap and break down a support instantly without it. Either you break it with the gap, meaning the gap will open below supports. That would be the best case scenario. We keep on following half an hour from now, and we open Wall Street in here, and basically Wall Street keeps on breaking down supports. And that, if that's the case, then we'll have a nice breakout area in here in which I think Apple could just keep on falling fucking apart. So everything suggests Apple is near a trend trade, which means an extended wave. 1, 2, 3, 4, extended wave 5 to be expected. So we could have something that lasts longs and probably going to push us back to the previous areas of volume, which means leading us back to $190, which is a big drop for Apple. First big drop, and it's going to last. I think in here we're going to have wave 3, which means wave 3 leading us here. Wave 5 will probably lead us at least lower. So I expect us to go $77 approximately on Apple at the end of that bearish wave. But obviously we're about to make the trend trade in here, which means we're going to trigger all the stop losses. There is no interest in price in that area, so probably I think go straight line in here. So there is a 10 to 12% drop probable on Apple if today is triggering the plan, and I'll be freaking happy to see that happening. Okay, so that's basically it. We're going to talk about AUDNZD before terminating today's podcast. So the thing is that I stick to the plan. We managed to validate the breakout for some reasons. We're far from the target, but the market decided it to be validated as we confirmed it by a bearish additional cycle. So what we need to hope for right now is for the market to detect this and an exit. It's going to be the case because previous signal was a taking profit. So it's going to be exit. And whenever you've got the exit is a signal that is limiting the risk enough to consider a buying entry. So meaning you can aggressively buy an exit signal. It remains risky, so I won't put all the money in here. So I'm not going to be leverage 8 all again just because I have an exit. But I'm probably going to rise my interest in that market and add some of the money I've been putting out back then. So it was going out to go in again at better prices. I think those better prices are just slightly below that low, where we're probably going to trigger an exit signal from sine wave. And I would pretty much like to have this happening with a momentum pattern as well. So if we do have a double signal, exit plus momentum confirmation, really is going to comfort me in the way that something good is going to happen next, and that we might find some bullish support on that asset. Final support finding, I mean, just I found out that comparison back then, which for those who've been trading this with me on a long run, so those who were there back in 2017 and you must be reminding this. Basically, the market fucked me 2 times in a row. So I'm going to have a look at the weekly chart so you'll see that much more clearly. So to me, that trend line is the thing we need to break up. We obviously will. In here, we broke it up with a catalyst, meaning big market catalyst of AUD back then. We broke it up with a gap up, and the market kept on pushing up. And I thought, okay, you know what? Breakout gap. The market is buying, so we've got everything we need to just keep on going forward. So I had no reason back then to take my profits. So I'll just let it go. And the market reversed. So pull back to the previous support. I said, okay, it's just a pullback. We're filling the gap. We're loading on buyers, and we should have the breakout happening again. The market fails again right at that same trend line and make a bearish breakdown. But it's just retracing to lower supports to buy again and retest that fucking same trend line. Same trend line again. Same breakout occurs. Same scenario. Bullish catalyst in here. The market is gapping up, buying at the open, and then what? The market retraces. Same things happen again. Retracing back to the breakout level, as we did back then. Trying to find bullish guys. Bears at play, breaking us down. Not breaking the major support, but then trying again. I think at some point it's going to fucking work out, because we have to make that break up, I think. But right now, the market's just proving me wrong like it did the last time again. So the problem is we might be just at that stage, meaning the market made another bearish breakdown back then. Stupid breakdown. I had no reason to be that way. So we'll see if that's the case. If for some reasons we try to find support in here and fail it, which means finding support and had to go lower, then this is where we want to buy. So you need to, the stop loss to me needs to remain there, okay, below that low, until we manage to find that dip. And I do fucking hope that the next time we're going to make those damn breakups, this time will be the good time. So next time in here, obviously I'm going to buy again, and I think and I hope that this time will be the final time to make it, that will finally have the trend to play its game afterwards, after 2 massive failures. Even though back then we had everything we needed. Especially here, I see no reason for us to break those lows. And moreover, no reasons to break this low as well. So I'm obviously searching for buying entries, but I'm ready to assess the fact that we might go lower than expected. So regarding that underlying risk, you don't want to be too much leverage in here too early. Okay? Because you don't want to be among those who will be in the pain trade. More likely, you want to be waiting patiently for the market to validate. But anytime we go back to that resistance, that trend line, you can be damn sure and be fully leveraged on a 5-on-5 ratio. Waiting for this to occur, as for now we're still in speculative phases, so no leverage is possible on that market. You cannot risk more than 3 to 5% if we go there. I myself will lose 6%, but for only one reason. I've been taking huge gains on those levels in here, so I'm just reinvesting the gains. So I'm trading with previous gains. This is the only reason why I'm assessing ready to lose more than 3% in here. All right, I've been saying it all, so just taking you a few questions. Quick slide to euro dollar. Euro is looking very bad to me, and dollar is heavy bullish. Change your mind and shut that shit. You don't know how. You don't know me, I guess. I'm no fucking switcher. I stick to the plan, even if you think I'm wrong. I won't change anything. Only the market can prove me wrong, and for now it isn't. Okay, the market will prove me wrong if it goes to searching my invalidation level. So far we aren't. So as long as it is that way, there's nothing you should do. I think we're preparing for a bullish breakup. It's just that obviously when the market ranges, it looks like weak euro versus strong dollar, but the trend will reverse. Well, lower boundaries of a potential range, which means this vision you have might just reverse in a few days from now, and you will say the exact opposite. So basically, in a range, the one who's wrong is the one who says, okay, dollar is strong, euro is weak, when we go trading the lower boundaries of the range, and do the exact opposite. So you're the kind of guy who, when we'll go there, you'll say, okay, now euro is strong and dollar is euro is strong and dollar is weak. So you should consider making the break up. Okay, so no, I'm trading bullish because the context says I have to do so, and I'm just doing it. If I'm wrong, then I'm going to reduce the leverage and try another timing. But as long as I haven't been proven wrong, I think I'll be right, and I just wait for the market to prove me right. All right, it's just a difference. What you say is not going to impact the way I trade. I will trade the way I think I should trade, and I think I should buy because we're into interesting buying areas. And I think that market can show some bullishness. I'm just waiting for other traders to see it that way. My goal is not to do what's happening right now. It's to forecast what's about to happen next and what others will do later. And then just doing it before they do when the prices are interesting to speculate for this. Obviously, that comes with higher risk taking, meaning I'm going to take more stop loss than a trend trader. That's how it goes, and that's how it's always been. But I'm also taking more gains than they do. Because if you do manage your risk well, then you're obviously going to take bigger gains than the trend traders. Okay, so obviously trend traders will think that the euro is weak and the dollar is strong, and they will forecast this to keep on going. I'm a speculator. I think you're just wrong, and you're gonna be. I hope you'll be proven wrong soon. All right, bye guys, and you are inviting with scary words. I don't know what you refer to, Andrew, but if you can be more specific. Maybe that's the first time you just joined us, and obviously it can be scary because I'm just not. That's a choice I've been making, and I'm standing on this without problem. I don't fear using rude words or whatever this is. I don't fear saying the thing the way I think they are, and I'm not rounding the corners just to make sure that this is user friendly or shit like that. So I just say things the way I think they are, without detours, and I just. Will keep it that way. I mean, that's how I am, and I'm not going to change. If you think that's a little bit too rude to you, then no problem. You will see a lot of YouTube channels with people not seeing things the way I do, and in that perspective, I just invite you to go see those people instead of me. No one forces you to see those videos. It's just that's how things are in here. If you like it, you stay. If you don't like it, you're free to move. So bye guys, and see you tomorrow.